Good Tuesday morning, Market Chameleons. Everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Mitri Parker. How you doing, D?
Good morning, Will. How are you?
Great. I just realized disclaimer isn't up, so I'll put that up right now.
Yep.
There you go.
So good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
Okie dokie. Let me share my screen. If anyone's joined us for the first time, we do this show every morning to help answer questions you may have about Market Chameleon tools, data, or analytics. If you want to discuss strategies or something unusual you've seen, you're welcome to come on a show, ask the questions, navigate us to what you're looking at. I think that will benefit the rest of the community. Two ways to ask the questions are, one is to type them into the live chat on YouTube. Will's watching it. He'll read them back to me. If you want to come on a show and ask your question live, we also provide a link to Zoom. When you click on that link, it takes you over to Zoom. When you're in Zoom, there's a button, raise your hand at the bottom of the screen. Click on that. You don't have to turn on your video camera. Once we let you in, everyone could hear you. You could ask your question live and direct. While we're waiting for questions to come in, what we'll do is start out taking a look at the pre-market report, see what's trading in pre-market hours, try to get some insights from that. And if we don't have questions coming in, I'll navigate to a different section of the website to see if we could get some market insights. All right, so let's start out with the pre-market report. Over here, these are stocks that are trading in the pre-market hours. We have a list of our most active stocks, our biggest percentage gainers and biggest percentage decliners. Here I'm seeing 52 stocks made our percentage gainers list, 149 on the decliners. From this perspective, we're looking like we're setting up for a bearish bias at the open. If you take a close look at this list, you'll see that there are stocks on this list that are small cap stocks, ETFs. It could be a preferred stock, closed-end fund, anything that is listed on the major U.S. exchanges. If it's trading in pre-market hours and meets our thresholds, it can make this list. And to get some more focused insights on a smaller group, we could filter down this list. And I'm going to use these filters above. And here, the second filter in ETF, if you drop it down, it gives you a list of ETFs to choose from. And that first ETF, SPY, that's the S&P 500 ETF. So when you select that, let's do that now, SPY, the list below will get filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we do see 3 stocks made our percentage gainers list, 41 on the decliners. So again, from this perspective, we're looking like we're set up for more bearish bias at the open. The only one sticks, Meta up 1.5%. I think that they announced that they're going to start a subscription service. I think that's similar to Twitter, right? Look,
Premium, yes.
A premium service that's similar to Twitter's. So we'll see how that goes. I know that there was a long time of promise everything will remain free, but I think that when you're looking at the trends in the internet, I think that those models that depend exclusively on just ad revenues are going to start feeling the pressures that might not that may not be enough to continue to either build new features, maintain your your operations, secure, your websites. I feel like that, and we're kind of right in the business, and we see it, that the costs of running online websites keeps increasing year over year over year, to the point where I think that a lot more will start going. Yahoo Finance now has a subscription, right? I think they have a ad and subscription based service. So
Yeah,
matters.
yeah.
Huh?
They do. You're correct.
Yeah. So they're also moving towards that, in that direction. Couple places we're still getting earnings. I think Walmart was a big one that reported earnings today, down 2.5%. So maybe I'll discuss. I know that if we have no questions, I'll go to our articles that we generate and kind of walk through that article. Gave it like a couple minutes. If no questions coming in yet, we'll
Yep.
how to get away. All right. So let's go under news, these original articles. We did one last week. And what these are auto-generated articles. It's based on certain thresholds in our system that when they hit, it creates this article with the insights of these thresholds. Okay. And the idea here is kind of to do a walkthrough and analysis of a particular either strategy or historical analysis. But let's take a look at this example in Walmart. Okay, so Walmart just reported earnings. This was the last article generated on Friday. And as you can see, you had a bunch of them on Friday that you could go read it. But let's just do a walk through this article, what it's trying to point out. And here, this has to do with Walmart's earnings. Obviously, they just reported earnings. So ahead of earnings, we know that we detected there's a scheduled earnings event. So heading into earnings, we start to do certain analysis about potential moves in Walmart and using historical data and what are the options markets at this point predicting. And from the options market, options are volatility-based movement, right? You're looking at the magnitude of moves. And we look at it from what is the straddle implying, what type of move up or down post earnings. Okay. So here we see that the options markets were predicting a plus or minus 4% earnings move, right? Up or down. Okay. That's how we're looking at the magnitude of the move. And this goes kind of over that part of it, right? It kind of mentions that that's the second largest expected move since August 2019. And then it goes through and breaks down the analysis. And the idea here is your first kind of analysis of the earnings is, all right, how did Walmart move before? Before you even try to strategize or create a you could have multi-leg trades or from calendar spreads to butterflies to iron condors. But first you want to get a sense of, well, what's going on in the market? How are people pricing it based on how Walmart tended to move? Okay, so that's kind of the first analysis, and we're going to break it down from different perspectives. So we're going to look at the moves from different perspectives. And the first paragraph here, it looks at the last 12 quarters and said, okay, the most recent data, if we use the last 12 quarters, right? Because remember, the earnings are once a quarter. So even 12 quarters are going back years, right? but let's use the last 12 quarters. And this gives us a summary of what tended to happen. So on average, the estimated move going into earnings was 4.2%. So you could see, this one is higher than the average estimated move going into earnings. How did that compare to the actual earnings the next day? So that was the estimate or predicted move from the market. And on average, the actual move was 3.7%. So you could see that on average, the move was overestimated by 0.5% using the most recent data. So if we go down here, you could kind of see in this chart, these bars up and down, they show what the estimated move was in either direction, up or down. So you can see here starting from 0, and the actual move in green or red. So in green, that's when the actual move was up. In red, when the actual move was down. So you could see here that 60% of the moves, right, overestimated. So these were the stock moved less than the estimate. And here, one thing that is noticeable is that in the last four quarters, I think 1, 2, 3 of them did break it. So we've seen a lot of volatility in if we really come closer to the most recent data. And the last 2 didn't break it by much, but it did exceed it, by 0.5%. Here, almost 0.8%. There was a big one, down 11.4%. So that's something to keep in mind that, it tended to overestimate. Most recent data shows that the volatility has been increasing. That's why we showed the visual over here. So let's go further down and look at a deeper history. So this is just the most recent data to give us a view of what's been going on. Let's now measure it from more perspectives. And the idea here is we want to take a look at different potential outcomes, how historically it's moved, just so we could create ourselves some kind of a historical odds, right? And when I'm coming down here, the rest of the article, it's going to look at the earnings moves from 3 different perspectives. It's going to take all our history that we have, and it's going to say, let's compare what the one-day actual move was in Walmart. So if we started the day before the close of market, the day right before earnings, and then waited after earnings to close the next closing date, right? So close to close, what were the earnings moves? On average, how many times did they end up being below 4%? How many times did they move above 4.7%? Then we're going to look at it from another perspective. We're going to say, all right, let's take a look at the earnings move, but instead of looking at it from close to close, we're going to look at it from the previous close to the next day after it reported earnings, the opening price. Okay, so that would be, it closed one day. The next day, where did it open after they released earnings? So we know it's like either, forget what it is, they're either reporting before the market opens, right? So now they released earnings before the market opened. People have time now to look at the news, read through the financials, read through whatever management is talking about, forward-looking statements. And what's that initial reaction at the open? Because if you're trading options, the market opens, you could start hedging your positions at that moment. So where does the market tend to open from the previous day? What type of move do we see the initial impact. All right, so we're going to look at these two perspectives. And then another way we could look at the move is the following. The market closes day before, and the next day, right, the market opens, has a full day of trading. What is usually the move to the high of the day and low of the day, right? Because you got, instead of just looking at those 2 points, open and close, what if we took the average move all the way to the high of the day or all the way to the low of the day? Would it cover this 4.7%? In other words, okay, I bought the straddle. Maybe it doesn't fully, open at 4.7, 5, 6%, but there's still volatility intraday, and it could be thin. So if we just compared it to the very high on the average high of the day, the average low of the day, how does that compare to this one? So really what we want to do is see, how does this 4.7% measure up to historical stock moves? So we're looking at 3 different distributions of returns, right? Close to close, close to open, and then previous day's close to the next day, average high of the day versus average low of the day. All right. So we're going to break it down into, I think, 3 charts. So let's say the first is the close to close, 1 day move. So here you could see this blue one here, that was the 4.7%. That was the anticipated move, or the market predicted move based on the straddle. So how many moves were above that? Well, 25% of the historical moves going back to February 14th, 25% made it above the 4.7. So you could see it here, this line over here. So you see one up here in the red means the move was down, the green move was up. So 75% of the historical moves going back to 2014, almost whatever that is, 10 years or 9 years, whatever that is, going back that far, 75% of the actual moves were below, 25% above. So it gives you kind of a view of the historical odds. But you could see that a couple times when it moved, it had some big moves. 11.4% to the downside, 10.9% to the upside, 10.2% to the downside. So 9. So you could see here is that some of those moves, were pretty large. So now you're getting a better picture kind of those historical odds. This second line here, that the first line is comparing it to the earnings move, the most recent predicted. That second line is the average historical moves. Okay. So then let's go down and look at it from another perspective. Okay, those are the moves from close to close. What if we looked at where the opening was, and we're taking that position to the open, and we're not waiting for the rest of the day? Where does usually the opening occur? Okay, that's where we could first hedge our positions. So these are only looking at the gaps, opening gaps. Okay, so here gives us the history again to 2014, and says on average the opening gap moves were 2.9% up or down. So the largest in the last 9 years was 7.8%, which is 3.1% higher than the current. Okay, so here's again, that blue one line is letting us know what the market predicted move is. Right, that's as of Friday's close, really. And here we get to see visually, well, how many times did the stock gap above there? How many times did the gap stay below that 4.7%? Again, we're measuring it up against the 4.7%, the most current predicted move. So here we see that 19% of the historicals going back to 2014, it gapped more than the 4.7%, 81% lower. So for the majority of the time so far, that the move was less than this 4.7%. All right. That again, what do? We looked at it from two perspectives. One, close to close. The other one, close to open. Everybody okay so far?
Yeah, perfect. Can you just show everyone how you get to this page again? We had some questions about that. People came on late.
Under news, original articles. Here. These are our generated articles, again, based on certain thresholds are hitting. For example, here Walmart's coming up with earnings. This is the earnings move. We go in there and start analyzing, trying to get a visual so you could start kind of looking and estimating what are historical odds relative to the market predicted odds going into earnings. All right.
Perfect.
So, all right. Again, there's no one right way to measure it. There's just different perspectives to look from. And we actually look from three different perspectives so far. So one, we looked at the most recent data, right, going back 12 quarters. Then we looked at a longer history of close to close. Then we looked going back to February 14th. Then we looked at a long history of gap moves from close to open, right? And so far, the data shows that the market tended to overestimate the moves, that based on the most recent 4.7% predicted move, the majority of the time, not all the time, but the majority of the time, the move was below that, the current predicted move, 4.7%. What about the probability of the stock touching 4.7% at any time between the previous day's close to any time of the day, to the high or low, right? How many times did it even touch 4.7%? So in other words, were there, even though maybe it doesn't gap up that much and maybe it doesn't close that much, but if we took intraday volatility into account, right? If we looked at the entire day and said, at any point, right, if we just waited, how often did it touch 4.7%? So now we're looking at it from another perspective. This is our fourth different perspective to look at that earnings move. Okay. So in the last, now we're going back 16 earnings dates, the last 16, 5 of the 16 times that the stock price moved more than 4.7% at some point up during the day. Okay, so maybe it didn't open there, maybe it didn't close there, but at some point of the day from the previous close, the stock moved at least above this 4.7%, which gives it a 31% probability of hitting that amount at some point of the day if we go back to February 19th. Okay. And you could see that we used the high of the day and low of the day. So it didn't matter in which direction. At some point of the day, we're just looking at, did it move more than 4.7% up or down? Okay, that's what we're looking at. So you could see sometimes it was to the upside, Sometimes it was to the downside. But if it did it, then we would log it. What was the high or the low? And you could see here that 31% of the time, at some point of the day, it went above 4.7%. Right. So then really cool, we try to keep these short, right? So we could try to keep it short, so it's a starting point. It's a starting point to do your analysis, build your strategies, create your own different historical odds. But what do we do here in the short article? We really quickly, we broke it down. We said, okay, here's the expected move. That's the market's prediction. We could bet on the straddle that the move will be higher. We could bet on the straddle that the move could be lower. What are the odds we want to give it? What are the average moves? And really quick, we went from, I think, what do we do? Looked at it from 4 different perspectives. How often did the predicted move overestimate the actual move? Right? That's what we did here. 67% of the time using the last 12 quarters. If we went back in history, how often did the actual move go above most recent predicted move? How many below? And we looked at it from an earnings gap. How often did the initial gap go above 4.7%? How often was it below? And then we looked at it from a probability of reaching, a historical probability of reaching that point at any time of the trading day after reporting earnings. Okay, so there you go. No questions there. That's really,
that was great, D. That was a great analysis. Thanks. Rob had a question. Going through this article, he remembered before we made the change to the landing page, there used to be a list of ideas that would populate. He's wondering, and I know he knows you showed him before, but he asks if you could show him again how to recreate the list that used to be on the front page. Maybe that we'll write it up against the open. Maybe you could look at that tomorrow. I'll copy that and remind you. And Alex was asking, you have a lot of stocks that are on the hard to borrow list. What's that saying about the stocks if they're on the hard to borrow list?
Okay, well, I think in the next 2 minutes I wouldn't be able to answer all those questions.
All right, let's leave them tomorrow.
Yep. All right. So
perfect.
Everyone, yep. Thank you for joining. Stay safe out there. Have a great trading day. Hope to see you guys tomorrow.
All right, trade peace, Chameleons. Have a great day. Thanks, D.